Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video, which I think holds the title for longest video title in my history at least, is Trump versus Sanders versus the investment banker in France, and will it really influence the U.S. market? This is market analysis for the week of April 24th, 2017. Now, of course, I'm talking about the French election. And that has started with the absentee ballots or whatever they call it over there, and then there's going to be more of that. I believe it's going on. So I'm not following it super close because in the end it's all going to lead to the runoff in May. Apparently it's not like the United States where there are just two big candidates and everybody else is just, oh yeah, you want to be on the ticket? Nice for you. You know, you'll get 20 votes and okay, you could say you're in for president. So apparently there are three strong candidates. Now, I have read, and I'm laughing because I put way too much time into reading and watching videos about this and about the different candidates, but I cannot do it justice describing the platforms for each candidate. I know one, the woman whose father is basically a raging anti-Semite, doesn't even try to hide it. She's all about stopping immigration, throwing everybody out, getting rid of all the Muslims. And the opposite side, the one that they're calling Bernie Sanders, he's all about high tax rates, he's a socialist, letting everybody in, and okay, and then he's proposing 100% tax for earnings over 400 euro. 400, I think, thousand euro a year, which of course would mean that everybody over there, if they were smart, would make 399,000, or whatever it is. So he has that, and then there's the centrist. He tends to be more middle of the road. He's an ex-investment banker, and he's on the young side. He's only 39. So I'm not going to do any justice to this. So I'm going to link you to a video I watched with Katie Couric. I don't know why I call it Couric. Probably because I want some coffee, and that's Keurig. And all right, well, anyway, so Katie Couric, and she explains it pretty well, but you could just Google it. There are so many, believe me, I went down that rabbit hole, and it's scary, reading so many different opinions and so many different articles on it, and what does it mean? So, in the end, how does it affect the U.S. market? And granted, I know that you may not be in the U.S., so you may trade foreign markets. That's fine, but the focus of these videos is the U.S. market. First of all, the biggest market in the world, the most influence, all that stuff. In my opinion, anything that happens based on who wins or who had a really good, it's going to, obviously, there won't be a winner till May, so it's just going to be who had a good showing, and, oh, okay, well, look, she looks like she's in position now to win it. This is another Trump, or, oh, he looks like he's in position to win it. This is the revenge of Sanders, right? It's obviously not Bernie Sanders, but it's in the same vein, or, oh, look at this, they don't want either one, so they're going with in the middle of the road, or whatever it is. In the end, whatever reaction to the results it happens to be, I believe it will be short-lived. I still believe we are going to a minimum down here to this A wave equaling this A down equaling C down at a minimum. Like I said in last week's video, I do believe that we will test the 200-day moving average, and my prediction, made it last week, I still believe we give up the entire election rally before it's over, okay? And again, just to show you, it would only be 50% of the rally that started from January 2016. And it would not be a huge 20%, we're in a bear market. No, I mean, it would be more than a 10% correction. I think we figured out to be 13 or whatever. It's irrelevant. In my opinion, we were pretty extended. Okay, we did have last week, if you look individually, we had a nice day on Thursday. Okay, we had a nice day on Monday, but all we're doing here, and I could probably get rid of this. Hold on one second. Let me get rid of this line, okay? So even if we get rid of this line, all we're doing is we're trying to get back over the 50-day moving average, and we have not. Now, could I be wrong? Of course I could be wrong. I always, in case you're new to the video, because I am getting a lot of new subscribers, and by the way, you should subscribe to this channel so you get updates whenever I do them, and you can also join the free email list at attackthemarkets.com for intra-week updates. But anyway, I always give myself a pretty decent chance of being wrong. And that's the biggest mistake that a lot of traders make. They get dug in. I'm not saying you can't have a firm opinion, and I'm not saying you can't pressure advantage and let the move ride when you're correct. But I have seen it in the, I think, what is it now, 18 years that I've been assisting other traders and coaching and mentoring, helping them, that they just get so stubborn and they think, no, the market has to do this. There is no other choice, and it's just ridiculous. Okay, I'm not saying you shouldn't be confident. I'm not saying that you shouldn't trade with certainty, but you have to have your risk in check. You have to be able to manage your risk. Have stop losses. Make sure you're trailing as it moves. I'm not going to go on the soapbox and preach all this right now, but just think, like, because I'll get an email say, well, Tiny, why do you say that you may be wrong, or why aren't you so? Because I could be wrong. Okay, the market is much bigger than any of us, and everybody who watches this video combined, the market is much bigger than that. Okay, and it can do what it wants when it wants. Our job as traders is to identify high probability setups. I use technical analysis to do that because I know a lot of people think it's voodoo and magic, but it's not. All it does is map the psychology of what the participants are doing in the market. Okay, and then I look for entries. I look for what I call the perfect trade setup. Doesn't mean it's going to make money, by the way. Don't confuse that, but I'm looking for proper location, a good strategy, or a proper strategy, and the right tactic to enter. Okay, that's what I'm looking for. Those are the three elements of the perfect trade setup. I teach it in my course, which is coming out shortly. I know I've been saying that, but I've been working on it and redoing it and recording videos and all that stuff. Anyway, so what we're seeing here is we have the A wave down. You could call this 5 waves, 1, 2, 3, 4, 5. Then we have an A, B, C up for B. And so far, if you want to cut this back, and I'm not a fantastic Elliott waver, okay, I'm a kind of seat of my pants kind of Elliott waver, but you got 1 down, 2 up, 3 down, and then notice 4 has not taken out 2 yet. It came close, but has not, so that means my count could still be valid. Now, this whole thing, if this is 4, the 5 down, that could be wave 1 of C. And then we could correct in 2 of C, go down more, 3 of C, 4 of C, 5 of C, and then it's done. Okay, we could break down into 5 waves just like we did here. This took, let's do time-wise, this took from March 1st, and we'll use this low down, this took to the 27th, that's 26 days. So far here, we have the 5th to 21, we have 16 days. Okay, so what do I say, 26 here? And that's calendar days. It's not trading days, whatever. But whatever it is, we still could get 10 more days here, all right, which is whatever it is, a week and a half, right, because I'm doing calendar days here. Well, actually, no, I'm not. I'm doing trading days. I'm sorry. I am off my rocker here. So these are trading days. So 10 more days would be 2 full weeks. So, yeah, I mean, we could complete this, have time, and nothing's saying it has to be perfect time symmetry, the A wave down to the C wave down, but it's nice when it does, when it happens that way. So we could have 2 more weeks of this, finish up this type of move, and then get the A, B, C down from there, and then go. I'm wrong. First of all, I'll start worrying that my count is wrong, and I don't mean worrying like, oh my goodness, what am I going to do? Just saying, okay, my count is wrong. If this high is taken out right here, and I'm using the SPY here for the S&P, that's 236.26. If that's taken out, then, okay, my count could be invalid. But if the B wave high is taken out, then I'm pretty certain that I'm wrong with this count. Doesn't mean we can't take it out not go to new highs and then just fall again. I'm not saying that's not possible, but at least with how I'm counting. So if there's any questions, tiny@attackthemarkets.com. I may be confusing you with all the Elliott Wave talk. You may write me and go, Tiny, you're way off on this count, and that's fine because I am nowhere near an Elliott Wave expert, but I do respect Elliott Wave theory. I think there's a lot of good in it. If you have a chance to learn it and teach me about it, I am open to that, okay? But again, 5 down, ABC up, and this looks like 1, 2, 3, 4. Maybe we get the 5th wave down. Then it's 10 days, it's not a lot. And if you see, like if this is 4 of, so what do we got here? So we got one, I could be way off here. Maybe when this completes, maybe this is just 1, 2, 3, 4. And then we get wave 5 down and complete C from here when this decides to stop. All right, so that's what I'm looking at in the market. Like I said, I do not think the French elections, the influence that the French elections have, stick for any amount of time, but it could cause short-term gyrations based on preliminary results ahead of the runoff, and oh no, she's going to win, or oh no, he's going to win, or oh no, neither of them are going to win. And so it could influence us, because they'll make the excuses like, well, this is a changing, this is the way politics are changing across the globe, and all that other good stuff. All right, let's go through the indexes. I know I'm already at 11 and a half minutes, so I apologize here for that. Now, the NASDAQ is telling a different story. NASDAQ is nice and strong. NASDAQ does not look like it is going to continue lower. However, we have to watch and, of course, see, but if it can break out, get up above this high, head towards the 134s, 135 area, well, then we have a strong tech side of the market. Here's Amazon in a nice triangle. Here's Apple looking okay. Let's look at Alphabet. Not looking bad at all. Let's look at Netflix. Not really I don't consider one of the bells, but anyway, but looks okay. And the Russell, Russell's not looking bad either. I mean, the S&P, in my opinion, is the one that is looking at the cleanest count. Let's see if maybe the Dow, not even the Dow. I like the S&P's look even better. And it doesn't mean, it looks great, so it has to be valid. That's not what I'm saying. Okay, now the Russell is still lagging, as are the mid-caps, but they're not looking terrible here. They are not looking terrible here. You can see the Russell here above the 50-day, above the key moving averages. I want to see if it can get above 138.77 and try to rock and roll. And if that happens, if the NASDAQ goes higher and the Russell go higher, the SPY is probably, this count is going to get voided, and it's going to instead start to trade higher. All right? Let's look at the semiconductors. We'll go through some indices. So the semiconductors, nice recovery. Last week we talked about, look at this with the gap, and now look back over the 50-day moving average, see if that's going to get above 1,000. Here's Klatenka. Wow, nice and strong here, headed for 100. Here's NVIDIA, lagging, sloppy, not really interested. Here's Kulik and Safa. They look like they want to go higher. Here's Intel. Yeah, not bad. It was looking worse when it was below the 200-day. Now at least it's over the 200-day. Here's Analog Devices. Yeah, not so sharp. Here's Micron. Not so sharp. How about the banks? Have the banks shown anything? Not really. Banks are still struggling, in my opinion. This is a head and shoulders like pattern. It's not a textbook head and shoulders, but you got the higher low followed by the the higher high followed by the lower high here. This is kind of a neckline, but you got to watch the 200-day moving average. It's moving up at a nice pace here. Let's look at some of the stocks. Bank of America. Yeah, these do not look great. JP Morgan. They don't look horrendous, like, oh my goodness, we got to get short them, but they don't look like, oh, look at this, these are set up for as buy signals. Yeah, they're not really looking that great. Now, remember, the financials got ahead of themselves, right? Is Northern Trust. Like, if we go to the banks again, you could see, this had a really nice move off the election. Got ahead of itself, really sharp move. 33% gain here, basically. That's a big move in a couple of months for the banks. Very big move from 75 to 100. Okay, what about the broker-dealers? Same kind of deal. Taking a rest. Here's Goldman looking really not good. Now, again, I can't be biased on the downside here, because biased on the bear side, because we're above the 200-day moving average. But this coil looks like it wants to resolve to the downside and test at least that 200-day moving average. Okay, again, now if it goes up and fills the gap and starts rallying, okay. But that's why you put lines around the freaking pattern and wait for a break. I got to get my tool. Ugh, I have so many of these stupid windows open on this. I apologize, but that's why you got to put the lines on them and look for the move. Okay, here's biotech. I mean, biotech, I mean, it's in a triangle as well. Or coil, I think, is a better move for it because there's a lot of tight swings instead of the wide swings. But still, overall, it's just in a big range that started in the beginning of 2016. And there's nothing here other than maybe a short-term signal, if it breaks, that's saying, oh, biotech's going to recover and it's going to rally here. I don't see it. I mean, Gilead slammed, Biogen. It's just, all right, so let's look at some of the older economy stocks, I like to call them, like Caterpillar and John Deere. I guess more the industrial stocks. So John Deere we talked about last week. I mean, it looks like it's a little heavy up here. But again, if you're looking at short, it has to break and hold. And what's the risk reward? I mean, you're looking for it to go back to 105, no, a little under there. What are we looking for it to go back to? Down to 104s, like 104.50, something like that. Maybe lower 104s. But again, it's not a big mover, so that could be a good risk reward. Okay, gold. Yep, gold is coiled up here. And it is coiled up and looks like it wants to make another push. Excuse me. Wow, close. I don't know what the heck that's about. Make a push up to here. Up this high is 124.76 here. This is GLD. Okay. And it looks like it's going to move. Now, I got a question about the gold miners and why the gold miners are lagging gold. And I answered the email, but I want to talk about it now in case you're interested. So what happens is gold got the pop once the Syria situation, amongst, I put Syria in as a symbol. Wow. Once the Syria situation, as well as overall jitters of what that's going to lead to, it popped up above the 200-day moving average and got a nice move higher. So this move was at least partly fear-based. Of course, there's technicals. It was sitting at the 200-day moving average. It was churning under the 200-day moving average, so watch the pop there. But overall, this was fear-based. And what happens is when there's a fear-based move to gold, okay, so usually when gold decides to move, the miners will usually get a lead on things. But when there's a fear-based move, the miners, they're not going to participate as well because nobody really cares about the people that mine the gold. They only care about the gold in this case when they're looking for a fear-type move. Okay, so I hope that explains it for you. Here's oil. So oil, nice push up to 11 1/4 here. Right at this pivot ledge right here, and then boom, what a push down. And that was talked about, oh, that's why the market, but I mean the market really wasn't down last week, okay, overall. Okay, so, but people were blaming oil, but yeah, to me, oil looks like it's going to come back here and break down below 10 again. I would usually pause this to tell my son to go back in his room, but I'm going to do it on mic so you know that I take care of things. You can hear the noise in the background. Hey, Josh, you got to go in your room, buddy. I'm recording a video. Okay? So I want to show that for everybody, that I don't just scream at my kids and tell them get out of here. Although sometimes, unfortunately, I lose my temper, especially when they're beating the living crap out of each other. All right. So I'm looking for bonds to go back below 10, possibly test this number here. Down at in the 980s. All right, here's bonds. So bonds coiled under their line. They broke. Now, what happens here? Well, this is in my opinion where the rubber meets the road here. Right, we're between the 50 and the 200, so there's no bias. It's more just like a ping pong. I mean, we're below the 200-day, so you got to lean to the downside. But we're in the ping pong zone between the 50 and the 200-day moving average. So if we break out of this coil, I think we're going to head pretty quickly to that 200-day moving average. But what do we do there? We also have a gap fill, right, 129.70. If we roll back down out of it, look for a retest of this trend line down at the 121.80, and then see if it keeps going down to the 50-day moving average. So, again, I will link you to Katie Couric, who talked about the French election, and you can Google a million different articles on it. But I mean, and I'm not saying it's a waste of time. I mean, if it's something that interests you, go ahead. It actually, I had some interest in it. Then it just turned into a massive waste of time because I just started reading dozens and dozens of articles, and of course, opinions are like noses. Everybody's got one, so you're hearing it from, depending on where you're reading it, what the slant is. But I believe that we are going lower. I believe we will finish at least this ABC up. That is a first pattern I'm looking for, but I do think we're testing that 200-day and then giving up the election rally. I don't think it happens right away. I got an email, you said we were going to give up the election rally. Yeah, I didn't say in a week. That would be a really, really big move. Okay, but I am going to really feel I'm wrong once we take out this wave 2 high up here, and then I'm going to just give up the count if we take out the B wave high. Okay, all eyes on the French election, at least on the short term, but I don't think anything that happens to the U.S. market based off of it will be short-lived. I do not believe there will be a huge influence. Any questions? Tiny@attackthemarkets.com. I know I haven't been giving specific stocks. I've been going over some of the stocks we go over every week. I'm going to get back to that next week. I just don't really have... I went through a couple hundred stocks. I don't have anything that I'm comfortable talking about here. So I haven't forgotten it. I'm not going to completely abandon that. I just don't have anything for this week. All right? Tiny@attackthemarkets.com. I will speak to you intra-week if you're on the email list at attackthemarkets.com. Otherwise, I will talk to you in next week's video. Have a great week.